The next presenter is Rich Checkan. Rich is the president and COO of Asset Strategies International, which is an innovator in alternative asset ownership, including precious metals, foreign currencies, pre-1933 U.S. gold coins, and global asset protection. ASI's mission is keep what's yours. That's a pretty good idea. And is accomplished through carefully designed wealth strategies accessible for all investors. Rich has been an integral part of ASI's maturation over the last 25 years and is a proud graduate of the United States Military Academy. Please welcome Rich Checkan.
Thanks, Porter. So how's everybody doing? Are we awake? Okay. How many people had a chance to read the paper this morning? Anybody? Nobody. I did. You might not have noticed because you didn't read it, but last night, Vladimir Putin, Rishi Sunak, and George W. 43 all died and went to hell. Were you all aware of this? Yeah, they died and went to hell, and they get down there, and the devils give them the tour. Pretty much what you'd expect, right? Pain, suffering, hellfire, damnation. Putin notices in the far back there by the video folks, there was this big red phone. And he's like, what's that? And the devil was very proud. He said, listen, it's the newest technology, allows you to call back to the living world. Putin's like, I got to try it. Jumps on the phone, calls back to the Kremlin for 5 minutes, hangs up. Devil says that'll be $500,000. Right? Putin's got a little bit of an anger problem. He unloads on the devil. Devil says, listen, you don't understand. You're dead. You're talking to living people. High technology, pay up. Putin pays up. Rishi Sunak gets on the phone. 10 minutes talking to 10 Downing Street, hangs up the phone. Devil says that'll be $1 million. Math worked out right. He didn't like it, but whatever. He paid up the money. George W. 43 gets on the phone. He's on the phone about 3.5, 4 hours. No fiscal restraint whatsoever. He is talking to Washington, the ranch in Texas, friends, family, pets, people he doesn't even know. Eventually, he hangs up the phone like 4 hours later, and the devil says that'll be $5. You can imagine what Putin did. He threw another fit. He said, you're crazy. $500,000, $1 million. He's on the phone for 4 hours, and you're going to charge him $5? The devil says, listen, since Biden took over, America's gone to hell. It's a local call. That being said, this is not all Biden's fault, as much as we would love to pin the tail on that donkey. It is not all Biden's fault. It's not Obama's fault. It's not Bush's fault. It's not Trump's fault. It is the fault of politicians on both sides of the aisle for decades running, okay? Poor fiscal responsibility. They're bad stewards of our money, and that's why I am here to talk about gold. And I did not get, thank you. So we're going to talk today a little bit about central banks and what they're doing and why I think we should be paying attention to what they're doing. First off, I want to touch back on Mr. Buffett. He gets a lot of airtime at these conferences. Apparently, he's made a lot of money for a lot of people. He doesn't have as high an opinion of gold as I do, okay? According to him, he says gold gets dug out of the ground in Africa or someplace. We melt it down, dig another hole, bury it again, and pay somebody to stand guard over it. It has no utility. Anyone watching from Mars would be scratching their heads, right? Now, I don't know what the people on Mars think. I don't know if there are people on Mars, and I really don't care what they think. But here on Earth, gold is pretty darn useful, okay? The other side of the coin, and I don't want to block the screen for everybody, but the other side of the coin is, you know, this came in a lot of handy in the first quarter of this year when we had the run on the banks. And you see the leprechaun, he wished he hadn't put his money into dollars. He wished he's still sitting with a pot of gold. Gold is absolutely useful. It has been for 5,000 years. And this scenario that we're in economically is not going to change that, no matter what. But I want to talk about central banks because I think they're giving us, they're kind of showing their hands. It's kind of a tell, if you will, about where we should be putting our money as well, at least a portion of it. So central banks for like 21 years had not been buying precious metals. They had not been buying gold. They were net sellers. The last 13 years, they have been buyers of gold. And the last year, 2022, they were buying gold at a pace that we have not seen ever. 73 years they've been tracking what central banks do for gold, and they bought more gold last year than they have ever. okay? Past 13 years, highest total since the 50s and 60s, $70 billion was spent on gold by central banks last year. First quarter of this year, we were ahead of last year's first quarter pace. We slowed down a bit in the second quarter, so we're not buying as much, but so far through 2 quarters, we are still ahead of last year's record pace. Who's buying? A lot of people you would expect to be buying, okay? Singapore, China, people with an affinity for precious metals, right? Turkey, India, Czech Republic, Russia. There are others, obviously. These are some of the bigger buyers. A lot of the BRIC names, right? Brazil, Russia, India, China, South Africa. A lot of the BRIC names are on the list of gold buyers, and you probably can guess why, right? World Gold Council did a study. They went out to, I think, about 53 different central banks, some of them for emerging markets, and I think about 15 of them from developed European nations for the most part. And they said, okay, why are you buying gold? All right? And you'll see on this chart, the left side, as you look at the screen, the orange or whatever colored bar, that's the established Western countries. And on the right side, that's the emerging markets. So you can see the responses differ slightly based on what position they're in. Emerging markets obviously live or die by the value of the dollar and what it's doing from time to time. Western countries don't as much, but obviously they have an effect. So some of the top reasons, and they may sound familiar to you, performance during times of crisis. You don't have to look too far back. Look at April and SVP, the Silicon Valley Bank fiasco, and you can see how people turn to gold, and gold does well in times of crisis. Long-term store of value. Everybody's heard the story about the business suit back in Roman days. A toga cost an ounce of gold. When the Fed was created in 1913, gold was $18 an ounce. So was a brand new suit. Today, although it's getting whacked the past week, gold is down to the low 1800s. Can we buy a nice new suit for $1,800? I know I can. I can't get it for 18, right? Gold is preserving purchasing power, and it has done so all throughout the ages. It's known as a strong inflation hedge, but I'll tell you, it's also a fantastic deflation hedge. How many people think we saw asset deflation last year? It's a pretty common response. Keep in mind that what we saw last year in terms of headline inflation was consumer price inflation. What were assets doing last year? Through the floor, right? The NASDAQ was down 35%. S&P was down 25. The Dow was down 10. Bitcoin was down 66% last year. What did gold do last year in that deflationary environment for assets? Anybody know? Flat. Did nothing. And you might think that's terrible, but that was 35% better than the NASDAQ, 66% better than Bitcoin, et cetera, et cetera. So it's a great inflation hedge. It's also fantastic in a deflationary environment for assets. It's an effective portfolio diversifier because virtually nothing is correlated to it. No default risk, right? You own the gold, that's it, okay? It is what it is. Nobody manages it. Nobody mismanages it, okay? And it's a highly liquid asset. How many people remember when Bear Stearns fell or AIG fell, right? What happened to the stock market immediately on the news? Went through the floor, exactly. What happened to gold and silver at the same time, right off the bat? No, you'd think it went up. It went down through the floorboards. Why? Liquidity, I think I heard it over here. Yes, that's exactly why. It is one of the most liquid assets on earth. So all these people that were leveraged, right? They had taken money, as Porter said, out of their piggy bank, their home, and leveraged their positions in the market. The market fell. They had margin calls. They were going to lose everything. What'd they do? They sold their gold and silver, the most liquid asset they had. They met the margin calls. They lived to fight another day. And then bargain hunters swooped in and started buying gold and silver at depressed prices where they shouldn't have been depressed. Great opportunities to pick some metal up. Fantastically liquid asset. Other reasons to buy. Concerns about systemic financial risk. Anybody have those? I know Porter does. I listened to all his presentations so far. Concerns about sanctions. This is an interesting one. Sanctions, weaponizing the US dollar, right, is not only hurting our enemies, it's hurting us. okay? We are driving friends away from the dollar. They're saying, okay, we're in good terms with the US, but what if we do something wrong here, right? What if all of a sudden we're on the bad list and they cut us off from worldwide banking? So even our friends are looking for an alternative to the dollar because of the weaponization we've done with it. Anticipation of changes in the international monetary system. Much ballyhooed and hoopla talk about the BRICS, and they're going to have a new currency to rival the dollar. You know, I think if we keep down the road we're on, I don't blame them for looking for an alternative. We're not managing our currency well. We're weaponizing it, like I said. These are not good traits for a world reserve currency. I think at some point we have to change course, but that is not happening tomorrow, folks. There is nothing out there that is even close or will be close soon to replacing the dollar. Make no mistake about it. And then, again, part of de-dollarization policy. So even though it's not going to happen anytime soon, it is on the minds of central bankers, okay? And a lot of these come from the emerging market folks. Asked if this trend would continue by World Gold Council, same group of central banks, overwhelmingly, 71% said we're going to increase our holdings or our purchases of central bank gold this year versus last year. 28% said it'll probably stay about the same, and a whopping 2% said it's going to be less. 98% of folks, 99 almost percent of folks in the central banks feel that they are going to buy as much gold as that record-setting year last year or more. Okay? I think we should start paying attention. Should we care? Yes. Okay? Why? Porter hit on this. I pointed to a slide to Joe Nagel in the back when Porter said it this morning that, you know, politicians spend money, right? Here's what they do. They make political promises. And this is not new. This has been going on all the way back to ancient times. Anytime there's been a country that's in a dominant position and their currency kind of, you know, was accepted throughout the world, they have blown it up by following this guideline. Okay? First, you make political promises. Why? Because you want to get elected, and then you want to stay elected. So you promise stuff. You don't say, okay, here's $20, can I have your vote? You say, I'm going to give you what you want, vote for me, and then you spend more money than you take in. Unbridled spending, anemic revenues, Porter touched it, 2.3 versus 2. It's not sustainable. I don't care what magic money tree you have, it's not going to happen, right? Skyrocketing debt is what ensues, and there's two ways that that ends. You can default suddenly and catastrophically, and that is not an answer for the US reserve currency. Okay, the US dollar is the world's reserve currency. Or you can slowly, and I call this like death by 1,000 cuts, you can slowly die with mini defaults all along the way as you increase the money supply and make the currency worth less. Okay? And that's what's been going on for a long time. Inflation is always and everywhere a monetary phenomenon. So despite how you characterize inflation, how you define it, the definition is very simple. You increase the money supply, it is inflation. They are synonymous. And when you increase the money supply and you have more worth less currency chasing a finite number of goods and services, it's going to take more of that worthless currency to buy it. It doesn't matter if it's gold, gas, coffee, a house, an education, what have you. How do you know gold is going to go up in the future? Past performance is no indication of future performance. However, if you keep an eye on the monetary expansion of the currency and it keeps going up, tells us historically that gold's price will go up for the reasons I just said. I mean, these are highfalutin charts and they did all sorts of studies, and it's pretty obvious and intuitive that if the dollar or the yen or the euro is worth less, it's going to take more of them to buy your gold. Keep an eye on the money supply. You keep an eye on where the gold price is going in the future. This is what the dollar's done. This is the track record. I think I read something here recently that just now, the Fed, since its creation in 1913, the dollar is down 3,000, or inflation is 3,000%. Okay, so nearly $1 lost in purchasing power since the creation of the Fed. And the opposite is what happens with gold. Now, if you look at this chart for gold, you'll see that there's a little blip way to the left there. That is when we confiscated gold back in 1933. Okay, does anybody fear that we're going to confiscate gold again? Okay, a few of us. I don't. because the situation is different now. Now, the dollar is not tied to gold like it was back in 1933. And in 1933, they did not care one iota about holding your gold. What they wanted was they wanted to collect the gold, revalue the official gold price higher, and in effect do what? Devalue the dollar. That was the end game, and that cannot happen when you're not tied to it. I think game over. They're not going to confiscate gold. It's too small of a market. It is unimportant. Other than the confidence that people have in gold when they lose confidence in a currency. That's really the only reason they might consider it. And then the other blips up are clearly when we came off the gold standard, August 15, 1971, 52 years ago. And when you look at the 2008 and then the expansion of the money supply during COVID. That's where gold has popped up in value considerably, and more is coming because I don't see us changing how we do business. The recent debt debacle, debate, theater, whatever, was another example that politicians have not learned any lessons. They are not stopping the spending, and I'll tell you, if you're Jerome Powell, you can't fix this alone. Congress needs to get within budget, period. In fact, they need to do better than that. They need to get under budget. That's how you fix this problem. Jerome Powell cannot fix this. All he can do is death by 1,000 cuts. That's his only option. And that's his best choice versus everything, wheels come off the cart altogether. So given that scenario, I'm going to make the case, I hope I just did, that gold is essential. I think it has two purposes in a portfolio. One is all the time, that is wealth insurance. The other is sometimes when everything converges and the time is right where you could possibly make some profit. Clearly, number one is much more important than number two. Gold is wealth insurance. To me, that definition is this. Gold is a store of purchasing power with high liquidity for a potential financial crisis you hope you never have. Okay? So what you do is you figure out your allocation, you go ahead and you buy it, and you never, ever sell it unless you need to. And I usually do that as a percentage of net worth. So you never sell it unless you need to. If you have a financial crisis, you sell it immediately. That's what it's there for. That's what people did when Bear Stearns and AIG failed. That's what people do when they have this high medical bill that they can't find the funds for, or they're illiquid some other way. They sell the most liquid asset in their portfolio, they meet the need, and then as soon thereafter as you can, go ahead and replace that allocation for that next financial crisis that you hope you never have. That is the number one reason to buy gold. That is what our firm's motto is about. It sounds a little silly, keep what's yours. That's how you keep what's yours. You protect your purchasing power long-term over time, okay? What number? Everybody's number is different. I work with 10%. Where I come to that number, and that's 10% of net worth. Where I come to that number is World Gold Council and others have done all sorts of tests and studies, and they looked at different portfolios with different currencies, different stock bond mixes, and what they found by tweaking in different amounts of gold is there's kind of a sweet spot between 8 and 12% that if you have that much gold in your portfolio, regardless of the currency in the stock bond mix, you tend to increase performance and decrease risk. And 8 to 12%, I shoot in the middle, and math is easier at 10%. That's where I come up with my number. I'm a Polish kid from Jersey. That's about as difficult as life gets for me. Profit. There's another reason to own gold. It is nowhere near, in my mind, as important as wealth insurance, and that's for profit. And that's a little bit different. To me, I like another 10 to 15%, not of net worth, but of investable assets. When the clouds are aligned and it looks like we have a chance for a run in gold, I do think now is one of those times, by the way. And I treat that very differently. I go ahead and I allocate the metal. I actually weight that towards silver, because I like silver's profit potential much better than gold in this environment. And I go ahead and I make the allocation and I monitor that. I don't just forget it until I have an emergency. I look at it. If all of a sudden that allocation doubles, what do? Sell half. Don't think about it, no emotion, sell half. What if it drops 50%? What do? Buy some more, you're buying well. If you do that all along in a bull market in precious metals, then you are never worried about missing the top, right? You're taking your profits all along, you're buying well all along. It's kind of foolproof, unless you don't know the difference when the market turns from a bull market to a bear market and be able to differentiate that from a bear market turn versus a dip in a bull market. I've got some pointers for that. When do you look for the exits? When is this a bear market turn and not just a bull market dip? Well, first thing is duration. We don't have a lot of data, right, to go on. We've only decoupled from gold in 1971. We've had 2 bull markets. I think we're in the early to mid stages of the 3rd one since we decoupled and gold's prices floated freely. First one was 1971 to 1980. Second one was 2001 to 2011. Both of them are about 10 years long. So I'm looking about 10 years long. A lot of people feel this one started in 2015 when gold had a breakout above $1,500 an ounce. I don't know. We'll find out when we're all said and done. Look at the gold price. Again, not a lot of data to work with, but I'm looking for a doubling of the previous high, right? So 2 bull markets ago, the high was 850. Our new high was 1921 in September of 2011. I'm looking for a double plus of that. So I'm looking for somewhere around $3,500 to $4,000 gold before I think we're looking for the exits, okay? Gold-silver ratio, it's a misprint, not GRS, it's GSR. Gold-silver ratio, it's the number of ounces of silver it takes to buy 1 ounce of gold, okay? And usually when that number is around 80 or higher, then that suggests that it is a low price for both gold and silver. And when it's 35 to 50, it indicates it's usually a high price for gold and silver because gold leads the way. It starts going down first in a bull market, silver follows and dives deeper. Then when gold turns up, it's the first to turn up, silver follows and tends to go higher. Last bull market, gold was up 650% in 10 years. Silver was up 1,000%. Kind of give you an idea of the difference. So when gold and silver are moving from that low point at 80, and right now we're at 87, by the way. We've been as high as 127 on that gold-silver ratio, so sky high. When gold and silver both start moving up, gold starts, silver follows, goes faster. So as they both move up and silver moves up faster, that ratio comes down. And that's why we look to 35 to 50 for the turnaround. Sentiment. How many people took an Uber here? How many Uber drivers gave you tips on gold and silver? I'm guessing not a one. It is out of favor. It is hated. It is cheap and hated, okay? When Uber driver starts giving you tips, start looking for the exits. Interest rates, got to get much higher than where we are right now. I don't believe that we're only at about 5% inflation, or 3.9%, 3.7% inflation. I just don't believe it. Like the gentleman said this morning, Alf, when you strip out everything, then yeah, inflation's 0. That's what we're doing. If we don't like the numbers, we just take something else out. I believe those numbers are higher because I buy groceries, I buy gas, I send my kids to college. Okay, I know that everything is up and it's much more than 3.9%. And by the way, that's 3.9% on top of last year's 10%, right? So don't lose sight of the fact that inflation is not increasing as fast as it was last year, but it's still higher than it was even last year when we couldn't stand that, okay? US dollar, when the US dollar's strong, start looking for the exits. You saw that chart. Dollar goes down, gold goes up, okay? Dollar right now is flexing its muscles a little bit. I can't think for the life of me why, other than foreign money is chasing treasury yields. It's the only reason I think it's up right now. But it's still down 10% from the high just a year ago. It was 116 on the old index. It's 106 today. Not yet ready for that to be an indicator. Social and political stability. How many people feel we are socially and politically stable in this world today? I rest my case. Until we start seeing 3, 4 of these factors coming together, I'm not looking for the exits. I'm looking for higher prices in gold and silver. And I think the dips, like we're seeing right now, are incredible because they give us an opportunity to buy really well because it should not be going down. I don't think gold really gets going, though, until we start seeing a decrease in interest rates, at a minimum, a long pause, not a pause for a couple months and hawkish talk from the Fed, okay? Measuring sticks. I just want you to look at this. I know others have done this. Somebody else put up gold versus the S&P, I think. And this is gold versus the Dow Jones, okay? You notice where we are right now are not at new highs like the press would have you believe. The new highs, or the old highs, were in the dot-com bubble. That's that peak that you see in the middle of the screen. We're nowhere near those levels if you measure it with a proper measuring stick for value. Gold. The dollar is a horrible measuring stick of value, right? It's losing value. So I use an example. Let's say from here to here, let's just say it's 6 feet, right? So I measure it with a 1 foot ruler 6 times, it's a 6 foot span. Overnight, I cut an inch off my ruler. I come back tomorrow and I measure it again. Now it's 6.5 feet long. Did the speakers move? Did the stage grow? No, my measuring stick sucks. And that's the problem with dollars being used as a measuring stick of value. They're horrible. They don't work because they constantly fluctuate in value, usually down. That's why everything, as Porter said, is 60% higher. Everything. This is all about the dollar. This is not about gold or oil, or this is about the dollar. Losing purchasing power, your best protection for that is gold. Kind of an eye-opener slide for a lot of people. Again, I'm not putting this up to say gold is the best asset ever, you should own it and get rich. Gold is not there to make you rich, it's to preserve purchasing power, okay? But 23 years of this millennium, the Dow is up almost 200%, S&P is up to 225, NASDAQ's up 216, silver's up 330%, and gold's up 558%. How many people believe that that was the case over the last 23 years? Understand this. Again, this is not gold is the only answer. This is not get out of stocks. What I'm saying is if you don't have a little bit of gold in your portfolio, you miss the email, you miss the memo, you miss the point. Every portfolio ought to have a little bit of gold in it for wealth insurance, and from time to time, you can go ahead and make some money in it as well. When in doubt, when you hear people say gold is not doing its job, I hear them saying it right now, okay? When in doubt, zoom out, take a look at the big picture. This is what gold has done over the course of the past 100 some odd years. There's no question gold is doing its job. If you haven't signed up for the 1 10th-ounce gold coin and the 5 silver eagles out there, make sure you do it before dinner tonight. We're going to pick the winner. Somebody's going to walk away with all that loot. When we first started giving those away 25 years ago, that 1 10th-ounce gold coin was $25. It was 1/10 of $250 gold. Today, it's $200, 1/10 of $2,000 gold, okay? Coin's no better than it was back then. Still 1/10 of an ounce of gold. Been around a long time. As I mentioned last night, we were very fortunate. Porter has, referred people to us. He trusts in us and believes in us for, over 40 years now. He's done it for 25, since he started Stansberry Research. And we take that very seriously. We started programs like the Perth Mint Certificate that a lot of people have mentioned. They saw a video I did at Rick Rule's event and found it very informative. If you want that, let me know. I'll get it to you. That program's been around longer than a lot of our competition. We take care of our customers because our goal is to go ahead and help you hold on to the value of your hard-earned wealth. We'll help you establish your plan, help you buy on the dips. We've got a free newsletter and alert service. You'll get that by signing up there for the drawing. Get the free Silver Eagle and 1 10th-ounce Gold Eagle for the raffle. Send us your comments and questions to our information. We'll send you to our info@ASI number. We'll give you a free special report if you want it. The top 10 mistakes of first-time gold buyers, and you don't have to be a first-time gold buyer to get it. I'll tell you the number one question to ask any new dealer to make sure they're dealing straight with you. I can dissuade the myths of ETFs and buying stocks versus physical gold, things of that nature. In the end, you have access to all of us. My email is rcheckan@assetstrategies.com. Reach out to me directly. I want to talk to you. I want to be there for you. Free consultations, whatever you need to help your plan get established. Our goal is to help you keep what's yours. And I know I ran deep. I only got about a minute left because I told that silly joke at the start. But if anybody has any questions, happy to take it now. Your first hand was up there. Yes, so the question was, what's my opinion of gold-backed credit cards? What's your purpose? If your purpose is to own gold, it's a horrible investment, okay? Basically what you do is you own some gold, and the credit card, as you spend it, they sell off some of the gold to cover it. When you're selling off small, microscopic tranches of gold, what do you think the premiums are on that kind of a sale? Through the roof of this tent, okay? Not the best way to go about doing things. It's neat, I'll give them that, but you can do much better. Yes, sir. So the question was, why not buy a GLD or SLV instead of buying gold and silver? Okay? And my initial smart-ass answer is, if you want to drive a Mercedes, why would you buy a Yugo, right? But The bottom line is this, is they're very different products. With GLD and SLV, you own no gold and silver. Does everybody understand that? You own shares in a company, an offshore company, whose job it is to mimic the price of gold. And the prices, I know I'm running over, but I want to get this point out. The prices are almost never in line, right? So GLD is supposed to be 1/10 of the gold price. SLV is supposed to be 10 times the silver price. Why are they never the same? Because it's a fund and there's something to manage. And what they have to manage is this, physical limitations. If I'm a fund manager and everybody buys and sells all day, and at the end of the day, I have to buy 50 ounces of gold or 5,000 ounces of silver, guess what? I cannot do it. Bullion banks will not take an order for less than 100 ounces of gold, will not take an order for less than 10,000 ounces of silver. So the fund manager has to say, hey, listen, what do I want to do tomorrow? Do I want to take a chance and buy 100 ounces and 10,000 ounces and see what the market goes higher? Or do I want to hold back because I think it's going to go higher or I think it's going to go lower and I'll buy tomorrow? So there's all that kind of stuff going on. But in the end, you own no gold and no silver. If you want to own gold and silver, buy gold and silver. And I believe I'm out of time. Hook's coming. So. Thank you all. Thanks, bro.